All right, we should be live. Welcome back, StradeX. So here once again. Just give me a quick audio check and that you can see my screen, please. And we shall proceed shortly. All right, excellent. Thank you very much. Well, it's a pleasure to be back. I've thoroughly enjoyed time away, predominantly from streaming, with a few ventures in real life in terms of traveling, holiday, business, family time, and feeling very refreshed. It's good to be back into the markets again. It's September, and yeah, let's get back into it. So first of all, a special thank you to OK Exchange for partnering with me for streams. As announced earlier, I am a product partner now with OK Exchange. I will be working very closely with them in terms of functional developments and testing out various features of their exchange, which I get early access to. So a big shout out to OK Exchange. As always, anything said in today's video is not financial advice. It's just my view of the market, and that's all it is. Okay, so we'll proceed very quickly. I think in today's session, I just want to keep it very simple and focus on Bitcoin. We won't talk too much about the macro. We won't delve into too many of the charts. And I think I'd like to begin the stream with two very simple questions, right, for the audience. The first question is, in terms of the recent context, what is the market telling you? So for those of you who are in the streams, when you look at price here, what is price telling you at this moment in time? Which way is the direction? Okay, so two questions, rhetorical questions, or if those of you who wish to answer it, you can do in the chat. But what does the market tell you? We've been trading within a range for the last several months, since March, okay? March highs, we're now in September. Clearly, you can see that price has been making a series of lower lows and lower highs, okay? So what is the market telling you in terms of direction and flow? Okay, the market is, in terms of recent context, over the last 6-7 months, it's trending down. The second question is the market doing a good job of that, okay? Is it doing a good job of trading lower? Which it is, okay? So that leads me on to the next question, which is, at what point do we have to accept and not think with our emotional bias, looking for higher prices immediately, okay? So as far as I'm concerned, you have to respect market structure. You have to respect the trend. The trend is to the downside, albeit it has been very rotational from a range perspective, okay? There's been some very good long opportunities, and there's been some very good shorting opportunities. So there's been something for everybody in this market. Now, I just want to touch upon one fact, which is, I feel as though when Bitcoin trades near the highs around about 65, 70K, there seems to be real extreme euphoria. The sentiment is very positive. There's obviously talk about Bitcoin going to 80, 90, 100,000, right? Now, if you look at the timeline, obviously, I think altcoins have been pretty much obliterated. But if you look at the timeline in terms of Bitcoin, the extreme now is this a top? Is Bitcoin likely to trade lower down into 30Ks and reject and potentially trade lower? And I think you have to be objective. Ultimately, as a trader, I think it's, okay, look, at the end of the day, we can all speculate about price reaching $100,000, or some people assume that price is going to go to $40,000. But in between there's so much price action that has to occur, okay? And I think it's very important not to get caught up in too much of a sentimental perspective, but really think in probabilities from a trading perspective. Now, for those of you who watch my streams, I'm not one of these guys who is going to jump on stream every day, every week and tell you Bitcoin's going to go to 100,000. Primarily, I'm a trader. And when I talk about markets, my opinions and views will change on a day-to-day basis, week to week, month to month, and so forth. Okay, until I'm presented with new data that makes sense to me that it's time to shift my bias and trade with the market, okay? Now, contextually, I could be taking short trades, I could be taking long trades. It's all relative to the time frame that I'm trading. So if I'm going short, doesn't necessarily mean I'm bearish. If I'm going long, doesn't equate to the fact that I'm bullish. Now, taking a step back, clearly we can see that the market is trading lower and the market is doing a fairly good job of trading lower down, okay? Now, the point I want to make here is, at the end of the day, I think I look at price here, and one of the questions I have to think about is, look, are we in a period of strength? Is the market likely to go higher? Is it showing strength and momentum to the upside? And the clear, obvious question is no, it's not, okay? So for that reason, I'm playing a very defensive approach. I'm being very, very selective in my trading. Throughout June, July, August, and 1 week in September, I've only had 12 trades on Bitcoin, literally averaging 1 trade a week. That's all I'm looking for. And for those of you who've been following my streams and following the timeline, you'll note that I've been doing a lot of my business at these core extreme sell-offs, taking profit at these core points, okay? And that's all I'm trying to focus on, is working it from one level to the next and back down again, being risk adverse, managing my drawdown, and again, looking for these aggressive sell-offs to the downside, looking for long opportunities and so forth, okay? What I'm trying to do is essentially avoid any chop. So when price is in pretty much no man's land where there's just a lot of chop in the middle, that's kind of the zones that I want to avoid, and just really focusing on these key extreme points, okay? For me, it's evidently clear where those extreme points are and the type of reactions that I want to see on price. Now, I'm not going to talk about trade setups just yet. Hi, Charlie, how you doing? Hope you're well, and everybody else. Sorry for not giving anybody a shout out. Probably some stream rust. First stream back in what was probably first week of July. Let's just shift over onto the higher time frame context. Let's just start from top down, okay? Very, very simple. Okay, monthly chart isn't something that I find one that we can actionably make trades off on a daily basis, but if you just take the monthly time frame into consideration, the fact that we've never really closed above the previous all-time high convincingly with acceptance. You can see in March, price traded above the level, printed a new all-time high. April traded below the 69.70k level. And again, every month thereafter, May and June, rejected from that level and closed back inside. July also traded above the level and closed back inside. So you can clearly see where sellers are stepping into the market and price is essentially trading lower down, printing lower lows and lower highs. Evidently clear by the fact that we're now trading below the mid of this entire range, from the 70k level to the pivotal midpoint of 43.44. We are trading below the mid-range, okay? So unless price can essentially, and it should be fairly evident what I'm going to say here, to show some strength in reclaiming back above that 57k level, will I start thinking about entertaining longs, okay? From a high time frame perspective. Let's just drop into the weekly chart. Again, you can see price clearly making lower lows and lower highs. Let's bring in the macro trend scanner. When you look at this, immediately, when I talk about cause for concern, I'm not talking about the fact that, hey, it's time to get bearish and just dump Bitcoin. I'm talking about the fact that if you're trying to force the issue where you're trying to buy Bitcoin and you think this is going to take off in the next few weeks, well, I'm not sure I subscribe to that idea. I think there's certainly contention for Bitcoin to potentially oscillate, between this level of 59, 60k and between the 44k thousand level. So that's currently where I'm leaning towards. Now, historically, you've only got to look at price. Just give me 1 second. If you look at the logarithmic charts, for every time the weekly 12 and 21 has crossed over, predating back to May the 14th, you get a sell-off and a period of consolidation, okay? And again, you can see an extended, what was probably evidently a clear bear market. But the point I'm trying to make is I'm not advocating for a bear market. I'm not calling for significantly lower prices. Our Bitcoin is going to go to 25, 30k. It's just not the way I look at markets. It's just not really something that's actionable. I think it does wonders for your Twitter account. If you're going to start drawing lines all the way to 20K or lines all the way to 100K, is that really actionable as a trader? Not really, okay? And again, when you're looking for strength, you want to see the 12 and the 21s on the weekly EMAs crossing up, okay? Showing that momentum to the upside and the trajectory to the upside, again, clearly demonstrated in this example. So again, the real cautious aspect comes into effect when you get a 12-21 death cross. There's a possibility that price will trade lower. You will get the opportunity to trade those mean reversions back from a level of support into the bands. But essentially, to get bullish or looking for bullish momentum, you clearly have to wait for the market to signal a continuation in trend to the upside. Okay. Now, again, you can backtest this yourself. BTC Charlie's TraderXO macro trend scanner is free, available. I think it will probably outperform many participants in the market, including myself. But there you are, okay? It's one thing trying to stick to a strategy. It's another thing trying to curb your emotions. So it's a constant battle between the two. Now, where I have some slight reservations about wanting to aggressively long this market, you can clearly see we've been in a trend since October. It's been almost a year. We are in September now, and it looks likely, in my opinion, even if you just look at the 5-day chart, which kind of leads to a high level of degree what the weekly will do, okay? You can see we've already the bear signal flash. Price has been capped at that 61K level by the 12.21 on the 5-day. And therefore, I think it's only a matter of time before this cascades onto the weekly, suggesting that if you're aggressively looking to position the market, I think it might be slightly premature, and there could be slightly better spot buying opportunities lower down. Okay, so in terms of how I'm positioned, my spot exposure is very, very minimal in terms of Bitcoin. I've not had any interest in retaining spot and holding spot throughout this range. Okay, I've purely been trading the market, and I think over the next, at least for the next several weeks, I'm just going to approach the market from a trading perspective, looking for longs, looking for shorts. And again, from a long perspective, I'm not really looking to hold anything like from a swing perspective to new all-time highs until I see two things. One is a shift in market structure. Two is price showing me acceptance back above this trend scanner or the 12 and 21 EMAs and showing me strength and momentum in the market. Until that happens, I think we could go through a period of consolidation. Who knows what that's going to look like or how that's going to shape out, but essentially, potentially something like this. Or do we get a deeper retracement into that 44K level, and maybe let's see what happens from thereafter. Okay, so that's pretty much the 12 and the 21 that I wanted to cover, and how you can simply use a high time frame set of moving averages to tell you what the context is, tell you where the momentum is, and essentially you don't want to really trade against the momentum unless you are a very good mean reversion trader and you're looking for those extreme sell-offs to revert back into price. Okay, let's just quickly move on to the daily time frame. Again, one thing I've covered in previous streams is, and again, there's two ways of looking, two key points that I want you to remember here, okay, for future reference points, whether it's altcoins or whether it's Bitcoin. And point number one is this. Trajectory of the trend lines. When you have a strong momentum-based market, you do not want to fade that, right? You can clearly see in January at the start of the year, the moving averages. Look at the trajectory and the gradient. It's to the upside, okay? Point number two is when momentum drops off in price and establishes a range, applying a moving average strategy is from a trend perspective is no longer applicable, okay? And again, you only have to use a set of moving averages to understand what type of contextual environment you're in. Here, you're in a clear trend. You want to go with the trend. You want to long pullbacks. When you see a price, okay, in a range-bound environment with the moving averages, in terms of momentum dissipating, and then price trading above it, back under, over, and back under, that tells you that the time to hold on to those momentum trades is no longer applicable. You have to shift into a context-based environment, a range context-based environment, until you get a clear direction. Either it's a breakout of the lows or a break above the highs bearing in mind that if you see aggressive selling being absorbed, it's likely to be a deviation or a trap, and you're going to see price trade back inside the range, most likely going to the highs, printing in the lower low. Again, the bearish sentiment is fairly loud at this stage, but before you know it, many people get shaken out and price trades higher. Okay, so just something to watch out for. But again, you can clearly see in terms of moving averages on the daily time frame, what has been happening. There's been a loss of momentum trading. It's been very rotational. You have to play the extremes. You have to recognize the environment that you're in. The fact is now, in terms of value, this was pretty much the value area on Bitcoin. You don't need a market profile tool to tell you this. You can see where largely prices traded within the 70K and the 58K level, maybe give or take 57K. Just give me 1 second. So the key thing I'm trying to point out here is just understand the context that you're in. Okay, and if you're going to be looking for longs, you really want to be patient, looking for those high time frame inflection points where you think there's going to be a good opportunity of long in the market. Point number 3 is essentially if we are to roll over the coming weeks into the end of September, October, and you essentially at that point, then you want to see some form of base being developed. And what does a base look like? And I've talked about this quite often, how many people can fall for when price is coming off the highs. They think that the first aggressive point of buying is going to result in a VIA reversal, potentially higher. Now, I'm not saying it's not going to. It could, okay? But quite often the probability is on the low side, unless it's something really event-driven or there's a black swan event, there's been some extreme selling, then that increases the probability of a VIA reversal. But if it's a steady, gradual bleed lower down, rotational, trades lower, prints another lower high, another lower low, that's not so much of a VIA reversal. And you're really looking for some form of consolidation for many, many weeks, okay? So if we do go lower down, again, I'm looking at the markets at potentially being a buyer of spot, not anytime soon, but I think I need to see some relative strength in the market. But meanwhile, I'm happy to trade the market both ways, looking for those longs and looking for those shorting opportunities as and when they set up, okay? The final moving average that I want to cover today is, actually there's a few more. Let's bring on the 21 weekly moving average. Now, for those of you who have watched my streams over the last 4 years, you know how this essentially plays an important part of my trading context, right? For me, it's very, very plain and clear. When price is above the moving average and the trend or trajectory is to the upside, you want to go with a momentum, okay? You don't want to trade against the momentum. It really doesn't pay to be net short. Yes, you can short if you want to hedge out some of your long exposure, if you believe that the market is overextended, but generally you want to get your context right. You want to flow with the trend, okay? Every time we lose every time we have lost the 21 moving averages, here you can see a classic example of that happening here. The pressure is to the downside. Now, we don't know if it's going to hug the 21, reclaim back above. In any case, if it does do that, it's a bullish setup. It's an opportunity to go long. Now, what you have to be careful or concern yourself with is when price does something like this. You get this aggressive sell-off, price consolidates for multiple weeks, pushes above the 21. The key thing here, you've got to pay very, very close attention to detail here. Many proponents of Bitcoin will tell you that, hey, look, prices reclaim back above the 21. This is really bullish. You know, there's a possibility that Bitcoin could go to new all-time highs. Again, just look at the trajectory before you get ahead of yourself. You really want to see price respect this level, the trajectory of the 21 moving average to start shaping up. Then you can start looking for higher highs and higher lows and start riding the momentum, increase your exposure to the upside, okay? What you have to watch out for in this instance is something like this, a deviation of the 21 moving average, and then you get a continued extended sell-off. Now, if you look at the relevance of price, we saw something similar happen again in February 2018. Extensive sell-off, trades above, but look at the bands. It's capping price, and therefore the rest is history. Moving forward to today, you can see what's happened. We sold off under the 21 moving average. We traded above it. The minute we started closing below the 21, that for me was an indication to get out of any longs, take profit, and just wait for price to come back to the next support level, which it did. It traded into that 52k level with the yen carry trade unwind and some of the risks that we saw across SPX and a spike up in VIX. Okay, that was a good buying opportunity. Where did price trade? It mean reverted back in to where? Into the 21 moving average. Again, capping price, okay? So for now, I've given you many factors of confluence to probably, and I say probability-wise, to just accept that the possibility of any upsides increase in price is not quite set in terms of structure, okay? I could be wrong, but I think in terms of thinking of probabilities, I think it's just going to be very much continued chop, continued grind. And you just have to be very, very patient for some consolidation, whether that's at the 52k level or at the 44k level. You have to remain open-minded. Now, I just want you to make you aware of an adverse scenario, okay? It's always good to have these adverse scenarios in the back of your mind. Not, again, because, hey, Excel's being bearish. It's also a way to understand that, well, look, if for whatever reason there is an event-driven sell-off in the market, we know historically in previous markets, in previous cycles, when we do get an extensive sell-off, when price loses a 21 weekly moving average, where does price generally tend to revisit? The 200 weekly moving average, okay? Evident by the fact that it happened here in 2014 into the 200 moving average. Brilliant buying opportunity, okay? So I've always been an advocate of buying strength when price is respecting or above the 200 moving average. Same happened again in 2018. We trade below the 21, we get back above it. Price remains trading lower during this period for an extended period of time into where the 200 moving average, okay? Same happened again in 2019. Price rallies, loses a level, tests the underside, trades lower down, reclaims back above, but look at the trajectory. It's not trading to the upside. It's just traded above it, lost the level, straight into the 200. So again, I'm not advocating for this, but I think if you were to project price on the 200 moving average from where it currently is, let's just draw a line of best fit somewhere along this level. Should price remain below the 21 moving average and trade lower down, then you want to be looking for buying opportunities, I would suspect, at around somewhere here if that opportunity is presented. And the key point being such that the 3940k level holds. You don't mind something trading below it. That's very, very short-lived. Reclaims back above. I think that's a fantastic risk to reward setup, at least to trade back to the highs again later in November, December. So thinking of time, thinking of price, thinking of opportunity, thinking of value, where do you think value is? Okay, we know that since the ETF flows have occurred, I saw a tweet earlier today by, what's his name? Somebody in the chat. Name's gone blank. But I think the average ETF buy-in was around about 61k. So, for those who are still holding onto their ETFs, well, clearly they're underwater. Are they going to de-risk, or are they looking to dollar cost average lower down? Remains to be seen, okay? So just some key factors that I wanted to share with you, and points of interest on the chart from a high time frame perspective. It's like I said, I like to trade the extremes or deviations or reclaims, and for me, there's a clear level at 43, 44, confluent with the trajectory of a 200 weekly moving average. It's not unusual to see price rally, come back to retest the 200, and then trade higher. So just be open to that scenario. If it happens, I think it's a great buying opportunity. And if I say otherwise, please remind me on stream that, Exo, this is what you said. Why have you changed your bias? So I'll probably need a reminder as well along the way. Yep, Jim Bianco, that was it. Is that clear? Are there any questions in terms of the high time frame context, in terms of price action, in terms of high time frame levels, in terms of moving averages? Any questions? Right. Now, just to add to that, let's move on to the stocks. So again, there are probably some reasons why I'm slightly reluctant to short this. I had a short from 65k down to 61. I had another short from 63k down to 57, 61 to 56. I tried to long 55s. I long 56. I cut at 55s. Okay. Let me just have a look at the stocks here. So again, on the weekly, in fact, let's just start on the monthly. I wouldn't derive too much from the monthly time frame in this instance. And despite the fact that, yes, it topped out in February, March and started rolling over, it's easy to assume that, well, the monthly stock RSI could oscillate to the lows and Bitcoin could trade significantly lower down. There's a lot that can happen in between there. And again, I'll give you a classic example. When Bitcoin topped out in 2021 and it traded at that 30k level, look where the monthly stock RSI was. And it went sideways whilst price rallied to new all-time highs. Okay, so I think what this has shown that, yes, there is weakness in momentum. Clearly, price has been trading within this range, and now it's starting to trade below that mid level of 55, 54k, which I think is a key level, a key pivotal level. But don't get too carried away with this, okay? Because there's always trading opportunities within here. But essentially, long story short, the best buying opportunities are when the monthly RSI is, stock RSI is at the lows and it's oscillating to the highs. That's going to give you your best buying opportunities, okay? You can see that here in 2023, starts trading up, you've got to go with price, okay? Onto the weekly. Again, this has been oscillating at the low since April, May, June, July, August, September. It can remain being in this oversold territory for an extensive period of time. And just because it's oversold doesn't necessarily mean you need to rush in and buy this, okay? Because if price is going to establish a trend lower down, then you should know that when price trends, oscillators can remain oversold or overbought for an extended period of time, far greater than you'd expect, okay? So just pay respect to price action first, but also be cognizant of the fact that this is at the lows at some point. I suspect this will oscillate to the highs again. And should that happen, I think I've got to go with the momentum and the strength in terms of looking for longs to the upside, okay? Same on the day. Let's have a look at the 3-day. Again, it's heading towards the low, so I wouldn't be overly eager looking to short this level here. Yeah, we could slide lower down, but we are into a level of support at that 52, 50k level. So do you really want to be trading it to support? Not necessarily, okay? Yep, if you've got a short from higher up, fine, you're probably in a good position. Personally, in terms of my system, it's not something that I wish to trade into this key level of support at that 50 to 52k level over here, okay? And again, with the daily, when you look at the 3-day, 3-day is oscillating to the lows. Generally, when this happens, it does give you some good buying opportunities every time, okay? And again, okay? There's been some good long opportunities. Price probably trades lower, and I'm going to start potentially considering some long trades for a mean reversion, whether it's from this point here or whether we trade below it, get back above, and you kind of get the context. Looking for key pivotal points. But again, on the daily, fairly oversold. Price, we've had a slow grind down with an extensive sell-off heading into the markets on Friday. Now, again, when you think about this, and you think of equities and NASDAQ, we had quite an extensive move on Friday. Same with NQ. Okay, I think there's every possibility that we could see price certainly trade slightly lower down to begin with. When you look at the dollar, I think there's every possibility that dollar could trade back up into this 102.8, 103 level. That's kind of the level that I think dollar could potentially trade over the next week or two. And I think if that is the case, okay, high time frame chart. This is the daily chart. Okay, you can see range lows. This is generally where the market reacts from. We're at that level again. So it wouldn't surprise me to see a push back up into that 102.5, 103 level. And I think if that happens, then we probably will remain in somewhat of a risk-off scenario, okay? But essentially, I'm not sure that the dollar will get any higher. Given the current data points, how the US economy is, I'm not really seeing dollar breaking above 103s. And the fact that there's a likelihood of rate cuts, due to take place. We've got CPI data coming out on Wednesday. We've got PPI coming out on Thursday. The following week, we've got the FOMC. Most likely leaning towards the 25, if I'm honest with you. That's my personal opinion. I could be wrong. It could be a 50. I'll be surprised if it is, but it could happen. So not ruling that out. But I suspect that the dollar could catch a bit over the next week or two into this 102, 103 level. This is the key level, the 100 level, that I think should hopefully, or I believe would hold as support before we get a push up, before we potentially see a move lower down later in the year. Okay, heading into, again, September, October, I really don't see the dollar doing a great deal, probably just ranges between here and there until we get a break in direction. And for that reason, it's the same on equities as well. I think when you look at the US yield curve, the 2s, 10s, okay, there's obviously, many people associate that when the yield curve comes out of inversion and disinverts, it's often a recessionary signal. Now, I think given that the data that we have, I'm certainly not leaning towards imminent recession. I do believe that, when you look at growth, I think growth is slowing down, but there's nothing really alarming to me at this stage. It could change in the next few months. That is screaming recession. And I think one of the reasons why we probably saw a fairly risk-off type of move on Friday was the fact that the yield curve was disinverting and now is pretty much above, out of inversion. So did that maybe cause some sort of aggressive selling in markets, and the fact that a lot of positioning was at the highs, and maybe the market just wants to flush out some of these participants that were chasing the rally up at the highs and looking for a pullback lower down, okay? I'm not going to start trading ES. Monday is going to be tomorrow is going to be my first day back in the markets trading full time for September into Q4. But this is certainly going to be a market that I will be trading, but I'm just not looking to step into this yet. But again, when you look at this, it's traded at new all-time highs. Monthly stock RSI is at the highs as well. When you look at the weekly could trade lower down in terms of the stock. Daily, pretty much bottoming. I'm not sure I'd want to be chasing this as a seller. I think it would make more sense selling this if we do get a bounce early in the week into this level, potentially looking for price to come back into this zone here, okay? That's kind of the 5,200, 50, 52, 51s, I think could get traded, but not a market that I'll be trading anytime soon, just for this next week. Let's move back onto Bitcoin in terms of trading setups now. When I look at the chart, the key levels that I've marked out, you saw the high time frame chart, the high time frame range high, range low. I've also marked out on this chart the yearly low, the yearly high, and the mid of that level, okay? Now, I was a buyer at that 54K level. It was pretty much this zone here, which was this daily down candle, 4-hour down candle, acting what I was hoping that would act as a level of demand. Okay, you can see where price just about retest the level. I was expecting price to take out the lows here, which it did. It traded up into 58.5. I kind of trailed my stops. My stop was down here, moved it just below here. Obviously, I got stopped out and took a small loss, okay? That's just the nature of doing business. My long was at 56. I could trade at 55s. Below 55s, you can see how price is traded below this 4-hour demand zone. Now, in terms of trade setups, what I'm looking at here is we have to respect the fact that on the high time frame context, the trend is to the downside. But if there is any possibility of me taking a trade from a long perspective, then I need to see price reclaim back above this demand zone, hold this level here, this 4-hour demand zone, and at that point, I'll probably start thinking about longs, at least into the monthly open, and then potentially back up into 62K. Now, the problem that I have with this is that I'm not looking to trade this as one trade. It will probably be over 2 legs. Why? Because if you recall what I said earlier on about the daily time frame, if you look at where the 12 and the 21 weekly moving average is, it's at that 58k level, okay? So we're trading straight into strong resistance whilst making lower lows and lower highs. So again, the probability of this working out and continuing higher, I'm not convinced. Equally, I think if there is an opportunity such that price trades back above into the bands, then gets back below that key 54k level, I think we will trade into the low 48s, into this lower bound of this demand zone, 47, 48, 49k. At that point, I think that makes for a decent trade setup. So again, from the long scenario, you want to see some strength, but really you're up against it as far as I'm concerned. You at least want to see this trend line break of the trend line, push back inside. I wanted to see this to be as a reference point for heavy sellers step into the market and sellers being absorbed. If you look at volume, we've got a fair bit of volume. Okay, look at that. So what I try to do is generally look for the extremes, extreme sell-offs, liquidations, and volume plays an important part in my trading. You can see what happened on August the 5th. We had an extreme sell-off in volume into this key demand zone. Okay, trades back above. That's the point where I started looking for longs in Solana. I think, I can't remember what else I longed. I took some longs on Bitcoin as well. Okay, and here we are. We're testing that level again with a decent level of volume, a spike in volume, okay? So again, these are the inflection points that I wait for. I generally try to avoid a lot of this chop, okay, in most cases. But when I see an aggressive sell-off like this, the first thing I want to now see is strength in the market. Push back above 54, 55, give me a back test off this zone, and I'll start looking for longs into the monthly open, into potentially 62, 63k, but being cautious about long in the market, okay? Because there is a lot of stubborn resistance up above. And don't forget the fact that I also talked about the fact that if you look at the weekly time frame, okay, if you look at where this is potentially likely to print a death cross or cross under, whatever you want to call it, then that also happens to line up at that 60k level. So that it's a strong level of resistance, whichever way you look at it. And should price reclaim back above that level, I think it's then fair to assume that we have some level of acceptance back inside the range, okay, that you can start maybe switching context into looking for longs again. All right, but we need to see that strength. You know, the safer way to play this is essentially looking for that level reclaim. You want to see price not essentially reject aggressively off the 1221. You don't mind a pullback into a high low in terms of the 4-hour time frame, but you're looking for that low time frame shift in context, which we're not getting yet. We are seeing a series of lower lows, lower highs on the 4-hour, same on the daily. Okay, so just respect the trend. It's probably easier to respect the trend, is what I should say. Okay. So like I said, if we do push back up into the monthly, where this is an established low, confluent with this low here, that's kind of your invalidation level. If you're looking for longs, aggressive longs here, you really don't want to see price trade below this level. If it does, then it's going to open the floodgate to trade back into 49, maybe run these lows, and then at that point, are you trading this range here? Or are you trading this, which also is a mid-level? If you look at this very carefully, it's also acts a mid-level. So again, you've got this zone here and you've got this zone here. It's up to you. If this is a continuation down, so you got to think about where prices come from sometimes. Okay, where is price trading? Where has it come from? So if we get a push up and it rejects, then I think there's a possibility of becoming short seller, looking for price to trade into 48s. If we just get a move down straight into this low here, and we get a reclaim of say 50k, that's interesting to long back up into 56, continuing that series of lower lows, lower highs. Okay, so just essentially in a nutshell, looking to trade levels, and it is a trader's market. Okay, if you've bought spot from lower down and you feel comfortable holding spot, that's fine. I think for me to buy spot, I need to see price coming to an area of value, which again, it's one of two conditions here. either we trade back above this mid-level and hold the level, then I may contemplate buying spot, or essentially I'm looking for price to trade lower down. I'm open to the possibility that we could trade 40, 44, 43, 42, somewhere down here. I'm not sure yet. You know, it's just, I'd rather react to the data. I couldn't tell you where price is going to go next. That's not my job. I think it's foolish to predict price trading all the way down to 40K in one candle. It's just being objective about price. Take each day as it comes, take each week as it comes, and just look at what the data presents. Look at for extreme sentiment shifts, look at for extreme sell-offs in the market, and maybe look for those opportunities that present good buying opportunities. Okay, but momentum is to the downside, and that's all there really is to it. Okay, so unfortunately, I mean, great news if you're looking to buy lower down, and if you're in cash like I am, I'm predominantly in cash. I'm looking for good spot buying opportunities. I'm in no hurry. I think there's a fairly decent possibility that we probably see very much continuation of chop and grind. I'm not really expecting any fireworks in September, possibly parts of October heading into the elections, maybe post-elections, maybe Bitcoin trades lower down and gives this type of formation, or do we get a slightly more extreme sell-off? Because when you look at price, okay, when you just look at price structures in a nutshell from a high time frame perspective, you have to respect the fact that you've got two inefficient moves here. This, okay, where if you use volume profile, I haven't got that set up today, but if you look at volume profile, if we trade below the 50K level, and so basically what you have to look for is essentially this. Okay, let me just mark this out. There's our yearly lows, okay? And there's our yearly highs, and this is a key pivotal level here. Essentially, what you're looking for is that should price trade below this level, it's easy to assume that because there's a level of inefficiency here, that it opens the floodgates that we're going to trade much lower down, okay? And it could do. But to support that idea, two things that I'd be looking for. I want to see an increase in volatility, and I want to see an uptick in terms of volume. And if price is going to trade lower down, it's really not going to fuck about, okay? You're not going to get something like this and it rotates back up and it pulls down and it does this, okay? If it's going to go and I want to trade that momentum to the downside, shallow pullback and it's going to keep going. Shallow pullback and it's going to keep going lower down. You get that acceleration until you get some real serious capitulation. You're probably going to get a heavier spike in volume, high liquidations. Anybody who's trying to long this on the way down, they're going to puke, which is going to cause price to go low down. The long again, price rolls over, they get liquidated. And again, the long, price rolls over, they get liquidated. That's just the nature of the markets, okay? Same shit happens on the way up. People start shorting this, they get blown the fuck out of their positions. Price goes up, they start shorting this, price pulls back, rips even higher in one candle, they puke, and so forth. All right, so that's where you get a shift of momentum to the downside. When there's aggressive spot selling, there's aggressive eagerness to keep opening longs whilst trade momentum to the downside. The minute they're offside, they're going to puke their positions, which adds even more pressure to the downside. So understand the flow of how markets move, okay? Right, now, the caveat to that is, should this be the range low and should this be the key level support? To support the fact that there could be an opportunity to get long into the market, you want to see a move down into this level pretty fast. Take out this swing low or get close to it. Doesn't necessarily have to swing low, swing fail the low. Okay, I don't know why CT is obsessed with swing fails all the time and everything has to be an SFP. It doesn't have to be an SFP. What you're looking for is, in terms of from a flow perspective, and we'll cover this in a later session, but what you're looking for is aggressive selling into this level. High level of shorts opening up on tape, but price is being absorbed by passive buy orders. You can generally use something like Trading Light, Bookmap. You can see resting orders absorbing those aggressive sellers. You'll see that in the spike in volume. You'll see it on a volume profile somewhere over here if you use a volume profile. Okay, and you'll see absorption. And even on footprints, you probably see like heavy shorts really piling in at the lows. And what you're looking for is stacked imbalances from an order flow perspective. And the minute they get caught offside, it's quite likely these shorts are going to puke, which is going to cause price to go higher again. Okay, whether that's a lower high or whether that can find acceptance above, 65k to say that's trend continuation, because essentially you want to see some sort of a trend break, then yeah, we can talk about continuation higher, and that might be the shakeout there. Okay, we don't know. All right, but you just got to be open to any scenario. Think logically how price will play out in your mind. How do you think the flow will be? What the tape will tell you? Maybe what, if you like to use footprints or volume profiles, what you're looking for there essentially. So try to poke holes in your setups. Try to think about price. You don't have to be 2 scenarios ahead, just 1 scenario ahead, okay? Even though I told you, and I talked about the 200 weekly moving average, I'm not advocating for price going there, but I'm saying to you, if price does go there, do you have a plan? Are you ready? Or are you practically going to shit your pants, sit there and thinking, what do I do next? All right? So just curb your emotions, think logically, and plan your trades. And there's a 4-step process that I generally do. So point number 1 is, before I take a trade, these are the 4 steps that I take. Essentially, number 1, which is oh, this mouse is pretty fucked. Yeah, my mouse is screwed. I don't know why. But anyway, look, the point I'm trying to make is there's 4 points. Number 1, plan the trade, okay? Plan the trade, plan the scenarios. Think about what you're looking for on the charts. Map out your levels, map out your indicators, your oscillators, maybe whether it's market profile charts, have everything in position. The second part is you need to think about, what is that trigger going to look like? What do I need to see to execute my trade? Okay? You should note down that when price is coming into your level, what you need to see to act upon that trade setup and what the trigger is to get into position. Once you've got into position, you should already know, as part of step number 1, your planning phase, where your invalidation level is going to be. Okay? So part number 1, plan your trade. Envision what that could look like, what the flow will be like, what you need to see to act upon that as a trigger. Once you've got your trigger, you move on to step number 3 or 4. 3 is trade management. If you've got a plan, stick to your plan. Only change that plan if you necessarily have to, okay? If you have a fairly good reason to change your plan. Otherwise, you're trading based upon your emotions. And if you're trading based upon your emotions, right? If you've caught a really, like, say for example, I know so many people that actually longed Bitcoin down on August the 5th, round about here. And they probably took profit over here, wishing that they actually held it. What caused you to take profit at this level? Because you're probably watching your P&L. Either fear took over or greed took over, right? You didn't follow your plan. You're watching your P&L. You're trading your P&L. That is not trading, okay? You made an emotional decision to exit your trade as opposed to a rational decision, a technical decision, and the fact is you never really had a plan. You just gambled on the fact that price traded at this level. You thought, yeah, fuck it, I'll take a punt. Let me buy it. I'm going to long it. Price goes up, you take profit. That's not trading, okay? Unless you plan to take profit at that level, fine. You've profited, you've followed your steps. Okay, so trade management is very, very important. What's the plan? What's your expectations for the trade? And then number 4 is, once you've taken profit or once you've cut the trade, why did you cut the trade? Reflect upon what you did well, what your emotions were. What your emotions were when you executed the trade. You have to journal that down. If you're not aware of your emotions, then you're never going to improve as a trader. And there's a very good chance for those of you who are not doing this, seldom, there's no fucking chance that you're going to tell me X or 10 trades ago, this is what my emotions were like, because you never journaled it. You have to journal your plan, your strategy, your execution, what you felt during execution. Were you scared? Were you shitting your pants? Were you shitting your pants because you're trying to put in too much size? Okay? These are all emotions that you have to curb. And sometimes that means you're bottling a trade, you're bottling a very good setup because you're over-risking. And you never really planned what size you were willing to trade or execute for that trade. So all these things matter. And I think these are areas that I want to cover over the coming weeks. It's certainly something that I've been working on in terms of educating or documenting, such that I can share some of my processes on how I trade, what I journal, what that looks like, what a trade plan looks like for me heading into trades. That's something that we'll cover in future sessions, okay? Is that clear? All right, we'll call it a wrap there. Yeah? If there's any questions, please leave a comment in the after the video. But today was just a session of how to think about markets from a high time frame perspective. Just keep it very, very simple. In these environments, a lot of traders have been chopped up. 100% a lot of traders have been chopped up. The fact that price has just been rotating back and forth, I'd hate to imagine what certain P&Ls would look like at this with this price action. It takes real discipline and skill to trade something like this, okay? It really does. You've got to be very, very strict with your trade process. It's very easy to think that you've nailed the bottom here and that's it, price is ready to go to new all-time highs, okay? You've got to have your invalidation points. But if you really want to play it local, that's kind of the range where 62, 63K to 49, 50K is what you're looking at. Kind of in no man's land here, all right? So either acceptance back above here into that value area. If you look at in terms of value, again, like I said, I don't really need a market profile chart to tell me where the composite is, but if you just look at this from touch point, okay, you've got these highs here. And again, from a touch point from the lows, you've got potentially this level here, okay? You can either take this zone here, all right? Or if you just want to play slightly more aggressive, you've probably got this zone here. Okay, these are the type of levels that you want to see flip one at a time. First get above here, then above here, then we can probably start thinking about pullback, then continuation higher, but we'll have to wait and see. I think until things come clearer in the week, I'll probably stream again, or I'll drop a video in the week, later this week, once my trading plans become clear. But one thing I want to do is, again, for those of you who tune into the streams, I really appreciate you watching the streams. I don't want to just draw a big rectangle box and just say, guys, this is support, this is resistance. I don't think that really teaches you anything. It doesn't tell you much about execution. It just tells you that anybody can do this. This is support. This is the level that needs to hold on Bitcoin. You can probably bid this. Yeah, you probably can, you know. I'm certainly contemplating some longs. If we get a push down and back up again, then yeah, I'll probably take a long, okay? But there's a lot more to it than that, okay? Yes, this is a key zone, but how are you looking to execute? What is your execution trigger? What if price trades through this? Does that mean it's bearish all of a sudden? Or is it going to be a short-lived swing fail of this and get back inside the lower bounds of this low time frame range where price consolidated, pushed to new all-time highs? We've had a reaction from this once. Is this all just a rounded retest of this level, okay? It could be, right? It could be. Maybe it's not as bad as the sentiment assumes it to be, where we've had this via reversal. This is the range to trade. Trades here, we're just back into a range-bound environment. So there's certainly a very good chance of a long opportunity potentially setting up. All right? For those of you asking where are my old videos, I'm restructuring them and reorganize them into years 21, 22, 23, 24. So they will be made available. I've had to just change the disclaimers on those for legal reasons, so bear with me. But I will make those available again, all right? I've just had to do some housekeeping for those videos. But I will be also releasing some short form videos, some concepts videos. So I think one of the things that I'd like to do is share more educational resources, maybe some videos, particularly around journaling again. My journal now, my trading manual is literally 140 pages long. It's an evolution of everything I've put into my trading as a system over the last 7-8 years. I have a 6-7 page trade plan. So when I map out a trade, I go through a thorough process of mapping out the trade, pre-trade, pre-trigger, actual trigger, trade management, trade closure, and then I do a review of that trade, and then I journal it into the software. All right. But apart from that, have a good week ahead. I hope that's helped. Just think about the high time frame context, and we'll take it from there. God bless. I'll see you later in the week. And have a blessed week ahead. Take care. Bye-bye.